Hi, I'm Graham Hand. I'm the editor of the Couplings newsletter. And today I'm with Alex Vinokur from BetaShares. Alex is the founder and managing director of BetaShares. And we're talking about exchange traded funds or ETFs. Hi, Alex.
Hi, Graham. Hi, Graham.
I'm going great. So, Alex, can you give us a brief background on what an ETF is? I'm particularly interested in how they're priced.
Sure. Well, firstly, an ETF is an acronym that stands for Exchange Traded Fund. Exchange Traded funds are managed funds which trade on the ASX, just like any stock or security. ETFs tend to track an index or provide access to an asset class, such as currency or commodity. In terms of your question, Graham, on pricing of ETFs and how they're priced, the first thing that I'll highlight is because of the transparency of ETFs, because investors can go on the website of an issuer like BetaShares and see the underlying holdings of each fund. So for instance, if you take the financial sector ETF, you can go on the website and drill down and see what that fund actually holds, each of the financial stocks. The way they're priced is effectively in real time during trading day. You can multiply the number of shares in each of the stock that we hold by the live price, and by doing that, you receive what we call as the indicative NAV, the INAV, basically. So we update the INAV for this ETF every 60 seconds to promote additional transparency. So when you, as an investor, are sitting at home on your CommSec or E-Trade and you want to purchase a unit on one of those funds, you can compare the INAV of that ETF to the actual bids and offers on the screen that the market makers are providing.
Okay, but BetaShares doesn't do the market making role. So what's a market maker?
Sure. A market maker is an ASX participant, so they tend to be specialized, sort of broking firms. So firms like Deutsche Bank, firms like Goldman Sachs or Susquehanna, that are in the business of providing liquidity on an ETF. So they sign a commitment to the ASX, and they often sign a commitment with a firm like ours, the ETF issuer, to ensure that they are on the screen for the vast majority of the trading day, providing both bids and offers at fair market value for the ETF units.
So if there's a buyer in the market who wants to buy an ETF, is there some process of creating new ETFs where the market maker works with you?
Yeah, well, the great thing for a typical retail investor is that for them it's as simple as buying or selling any share. So you log onto your CommSec, and the same way as you'd be buying a BHP on a Rio stock, you'd be buying a US dollar ETF, USD, or a financial ETF, QFN. That's quite straightforward from a retail investor's perspective. The way the mechanics work in the background is that the market makers have the ability to come to an ETF issuer such as BetaShares and apply and redeem units in our funds at NAV every day. So what it means is that on a day when there is a lot of buying and market makers sell a lot, to the extent they're running out of inventory of these ETF units, they can come and get more from us at NAV every day. And because of that open-ended nature of the ETF, the units tend to trade at or very close to NAV on the secondary market, being the ASX.
Right. And so just final question, what is the liquidity supply in the market? Because very often if you look at an ETF, it doesn't look as though there's that much on the bid and offer, but how
Yeah, look, it's a great question, Graham, and that's probably one of the more commonly asked questions that we get, sort of as a firm. And if you go into betashares.com.au, we actually have an FAQ section with answers to questions like that, but people ask that a lot. So the ETF derives its liquidity from the underlying asset class or a basket of stocks that it tends to track. So if you look at something like the US dollar ETF, it will turn over on average, about $5 million a day, so for example. But in reality, the liquidity of that ETF is mirroring the liquidity of the underlying AUD, USD foreign exchange market. And that market trades, hundreds of billions of dollars, a day. So from a perspective of an investor, whether that investor is an SMSF investor or an institutional investor, what you see on the screen in terms of bid and offers for an ETF is certainly not a limit. So what typically tends to happen is that when investors buy the offers will get refreshed all the time. Or the other way to approach this is simply pick up a phone and call us. A business like ours has a capital markets function which allows investors to access additional liquidity. So if they get in touch with us, within 30 seconds we'll be in touch with the market makers and they will be able to increase the bids or the offers to the extent necessary.
Okay, great, thanks. Alex, that's been a useful update on exchange traded funds. I'm Graham Hand of Cufflinks, thanks very much.